What if you could look at an investment and know if it's a golden ticket or a costly mistake? Financial professionals do this daily with a powerful tool built on one crucial idea. $1 in your hand, right now, is worth more than $1 you'll get tomorrow. But how do you apply that to an investment that pays out over many years? That's where net present value, or NPV, comes in. In this video, I'll walk you through how to use this tool to see the future in today's dollars, helping you make vastly smarter financial decisions. Section 1, the #1 rule of money. Before we get into the details, we need to understand the foundation, the time value of money. This principle states that money available today is more valuable than the same amount in the future. This is true for two key reasons: opportunity cost and inflation. Opportunity cost is the potential return you lose by not having the money to invest right now. If you have $100 today, you can invest it to earn more. If you get that $100 in a year, you've missed that opportunity. Meanwhile, inflation constantly erodes the purchasing power of your money, meaning $1 today buys more than $1 will tomorrow. This single idea, money now is better than money later, is the key to understanding net present value. Section 2, the investor's dilemma. Let's apply this to a real-world scenario. Imagine you have an investment opportunity. Pay $1,000 today for a project that promises to pay you $400 a year for the next 4 years. Is it a good deal? At first glance, simple math says you make a $600 profit. 400 by 4 equals $1,600, minus your $1,000 investment. But this is a dangerous trap because it ignores our #1 rule. Those future payments aren't worth the same as today's dollars. To make a smart decision, we need a tool to translate future earnings into their value today. Section 3, introducing your tool, NPV. This is where net present value saves the day. NPV is a tool that pulls all expected future income back to what it's worth today. After calculating the present value of all future cash flows, it subtracts your initial investment. The result is a single number telling you exactly how much value that investment will add to your pocket in today's money. Section 4. Let's calculate step by step. Let's solve our investor's dilemma. The formula can look scary, but the idea is simple. We just need to discount each future payment back to the present. To do this, we need a discount rate. Think of this as your required rate of return, what you could earn on another investment with similar risk. Let's use a discount rate of 20%. Here's the breakdown, year by year. Year 1. The present value of the first $400 is $333. Year 2. The present value of the second $400 is $207.78. Year 3. The third payment is worth $231.48 today. Year 4. The final payment is worth just $192.90 today. Adding those up, $333.77, $281.41.92.90 gives a total present value of $1,035.04. For the final step, we subtract our initial $1,000 investment. That leaves our net present value, $35.49. Section 5, the verdict. What does the number mean? So what does $35.49 mean? This is the most important part. A positive NPV like ours is a green light. It means the project is set to earn more than your required rate of return. It's creating value. A negative NPV is a red light. The project would earn less than your benchmark, destroying value. You should reject it. A zero NPV means the project is expected to earn exactly your required return. It's not a loser, but it's not adding extra value. Our NPV of $35.49 tells us this is a solid investment. It doesn't just meet our 20% benchmark, it goes above and beyond, adding an extra $35.49 of value in today's money. And that is the power of net present value. It's a tool that cuts through the noise of multi-year investments by bringing everything back to today's dollars, letting you make true apples-to-apples comparisons. It provides a hard number to base your decisions on, moving you beyond guesswork and into smart, value-driven investing. If this helped clear up a tricky financial concept, hit that like button and subscribe for more videos that make finance easy. Thanks for watching.